Welcome to this week's Earnings All-Stars. This is the video where I bring you the top stock charts for that week of the companies who are reporting earnings. And it's starting to pick up. We don't yet have the Mag 7, but they should be coming soon, just not this week. But we have one of the old fangmen to rely on, and that's Netflix. So I'm going to be bringing you that chart. And as always, these are some of just the hottest ones that are going, and some have very good earnings surprise track records. Others may not, but these are the ones in the spotlight. So let's dive right in. Okay, the first one is going to be Netflix, and I'm kind of reluctant to talk about this one. As you can see, just going to the quote page here at Zacks.com, it is a Zacks number 3 rank, which is the hold. 80% of the stocks are going to be holds on the Zacks rank. And this isn't too unusual going into an earnings report because the Zacks rank is based on changes to the earnings estimates. And for the most part, the analysts are not yet changing it. They're waiting for the report to see what happens. So usually the rank kind of just stagnates in the week or two right around the start of earnings season. And that's mostly what we have here with Netflix with that number 3. But scrolling down, we have the price consensus and surprise chart. And I wanted to show this chart this week instead of just showing the surprise chart, because I was curious what is happening with earnings with some of these red hot stocks, or just stocks to watch this week, because not all are red hot. But this one with Netflix, you can see why the stock has been on this big rally the last couple of years. It's up 78% in just the last year. It has come down a little bit off of those highs it hit at the end of 2024. But look at these earnings consensus up and to the right, still strong earnings growth expected for Netflix, and a pretty good earnings surprise track record. You really have to go back to the pandemic quarters to see a lot of red. And after that, we just had these 2 misses. Now, if you're new here, you may not know these little arrows do designate the beat or the miss. You can hover over them, as I just did on this one for a year ago, where they missed by 4%. But the size of the arrow usually designates the magnitude. And you can see this long red arrow the year before that. So apparently they have a streak going of missing on their fourth quarter here. That is designating that it was a big miss, and you can see it was 74%. But some of these small green arrows also reflect the same thing. So that was a beat, but just 6%. This is a smaller arrow, 3% there, 3.8. So this visually will tell you a lot, even if you don't hover over. And sometimes if it's a meet, we'll get a little green arrow. None of these are meets. That one almost a meet, just a beat of 1.77 there. So it will show up as a green arrow if they actually meet the number as well. But I consider that to be a beat. A meet or a beat are the green arrows, and that keeps their streak intact of, consecutive beats if they have such a streak. This stock, Netflix, has 3 in a row right now. So will they make it 4? We'll see. But Netflix, not cheap here, but better than it used to be when it used to trade at 80 or 90 times. And everyone would say, oh, it's all about the subscribers with Netflix, which it still is, but it's trading at 36.7 times right now. So that's not that expensive for a stock like Netflix, as long as they have this earnings growth still occurring. And it's not like down here where there was decline and then almost nothing going on here. This is pretty nice setup. So this is definitely one I'm going to be watching. Okay, then we're going to switch it over to a drug company, one I haven't covered in a while, Abbot Laboratories, ticker ABT. You can see it's a Zacks number 2, which is a buy stock. And that's a little more unusual. There's usually around 800 or so number two buys. But again, we are going into the earnings report, so it's a little unusual to see the number two. So I haven't looked at this chart a long time. Still an excellent track record on the earnings. Just one miss back here in 2021. That's outstanding. Barely missed, just 0.75. So otherwise, a great streak going, even if they're very small. This is just a beat of 0.83. But that's kind of what I would expect off of an Abbot Labs. It's telegraphing pretty well to the analysts what it's doing on earnings. But look at these earnings consensus here. Pretty strong growth expected for this year and next year, even 2026. But the stock is going nowhere. In fact, over the last year, it's up, but only 0.4%, or it's just hovering around break even. Trading at 22 times, though. So that's not exactly super cheap here, even with this earnings growth. And perhaps the stock is kind of recalibrating, waiting for the valuation to kind of catch up with what is happening now. So this is what I'm going to be watching to see if it can break out of this channel. I have a feeling it's going to beat again, but it might still be a small beat, and we'll see what they say. But this is Abbot Labs, ticker ABT. Then we're going to switch over to a transportation and a railroad. This is one of my favorite areas always. Union Pacific, ticker UNP. Why do I like it? They are on the Pacific Ocean, and they have routes that go all the way across to the Midwest, basically, but they have a bunch of terminals or big stations along the Mexico border. So very important for trade. And those are exclusive only to Union Pacific. So that's also why I like them. Ticker is UNP, as I mentioned. It has a Zacks rank of 3. Again, not really surprising. But what's happening with this one? Wow, look at the earnings all over the place. A okay earnings surprise track record. We do see a few misses here and there, and it missed last quarter, but barely, just 0.36. So that's only a couple cents, most likely. But otherwise, just these small beats when it is beating or it's meeting in some of these. But that's what I would expect from a railroad that's been around over, what is it now, 150 years, give or take. So UNP, though, over the last year, shares are down 0.6%. So basically break even on the shares, going nowhere, waiting to see if this 2026 earnings jump here is actually going to ever happen. Trading at 19.5 times. So not super cheap. And the railroads haven't been real cheap for many, many years, but they were mostly trading over 20 times, which is a little pricey for me. So it's nice to see Union Pacific below 20 times. This is another one where maybe the valuation's just waiting to catch up to those earnings. If we get a jump here in both 2025 and 2026. So we'll be watching a lot of these railroads. They're going to be rolling out this week and next week. But this one, Union Pacific, UNP. We're staying on the transports and we're going over to the airlines. We already had a good report from Delta. And look at this, American Airlines, ticker AAL, with the Zacks #1 rank. I don't think I have done an airline other than Delta and maybe Southwest on the earnings all stars charts forever, for years and years, because I mostly stay away from them. They haven't been that good of investments. And even on the earnings surprises, they haven't been that good. But the things seem to be turning around with the airlines, and especially the ones that have a lot of international routes, especially to Europe. Those are selling out. Those are at capacity. They are able to charge premiums. Any of us who know who've been trying to go to Europe know we can't really get a cheap rate, even in the off season. So a lot of extra routes being added. American also very strong in the Caribbean and Latin America. So they have a corner on some of those markets, and those are very strong now as well. So American Airlines got the number one rank. That's the strong buy. What's happening with the earnings and the surprises? Well, earnings looking better here. It's not tremendous earnings growth, but it is starting to trek up here in 2025. So that means the analysts are getting more bullish. That's why we got the Zacks number one rank. They are raising those earnings estimates. The earnings surprise record is actually surprisingly good. Just those four misses in the last 5 years, two right away when the pandemic hit, not a surprise, but just two others in the time period since. And we've got this big beat last quarter, 130%. So the analysts trying to play catch up, shares up 41% in the last year. That's a pretty nice return on one of these airline stocks. But you can see it's right at this key juncture, hitting these new highs, but waiting to see if it's going to break out a little bit more up until this level in 2021. And then maybe we go back to the pre-pandemic highs. But, that's a long ways off still. But maybe this report will light a fire under these shares a bit more than already are. It's cheap. It's trading at 7 times because nobody's really trusting on these earnings. But I'm keeping an eye on all these airline stocks because cheap and there appears to be growth. This could be like a new golden era for the airlines. I don't want to jinx them, but it could be. So I'm keeping an eye on American. AAL is the ticker. And then we're going to wrap it up with a company that is one of my favorites on the Earnings All Stars. We've covered it just about every quarter. Intuitive Surgical, it's a Zacks number 3 as well, but it has already pre-reported. I saw this big spike on the chart here, and I was like, something's going on for it to spike into the earnings report. And sure enough, it loved its results so much, it had to report them a little bit early. And they saw Da Vinci procedures. That's their main product, of course, the Da Vinci surgical system. It was up 18% year over year, and fourth quarter revenue up 36%. That was on a higher average pricing, as well as a lower mix of the leasing. So more people are buying the system, it sounds like, and at a higher average price. So as a company, you got to love that. And look at the earnings growth. It has always been like this, even in the struggles during the pandemic when hospitals pulled back on any kind of surgeries for obvious reasons. And so earnings were slowing in that period. But as soon as hospitals mostly reopened for all of these procedures that were not critical, then the system started selling again, and then we saw earnings take off. So now we're back to hospitals around the globe buying this great surgical system. And you can see this nice big earnings steady growth here expected for 2025 and 2026. But shares are soaring to new highs, up 65% in the last year. Obviously, we got the breakout once again. It's not cheap. It has never been cheap, but it is trading a little more stretched, even with this earnings growth, trading at 75 times. That's pretty pricey. That's why I've always been on the sidelines with Intuitive, even when it did have this pullback in 2022, when all the growth stocks had this nice pullback here. It never got really cheap enough for me as a value investor, but some smart growth investors did get in knowing that the Da Vinci system was still going to sell even when, things reopened, and it has. So now the only question you have to ask is, how much are you willing to pay for these earnings? It's pretty pricey here, but the growth is there, as we already know, because they pre-reported. Now, how much else can we get on the stock now that they have pre-reported? They haven't given everything, and they're going to have the conference call. So you might still see some more bullish buying on the actual earnings report this week, but a lot of it is priced in. So we'll see how the stock performs. It will probably depend on the overall market as well. So those are the 5 stocks I'm going to be watching this week. It is a shortened week with MLK Day, but that's not stopping a lot of action from going on. There's, several hundred companies that are expected to report, many more than just these 5 stocks. I'll be tweeting out a lot of the charts, including some of these price consensus and surprise charts all week long on all my social media platforms, Blue Sky, X, Stock Twits, all of them will get these charts. Because this is where things really start to heat up, as I mentioned earlier. So you want to make sure you get all of our earnings all stars charts. I know many of you are subscribing to our channel right now, and that is great because you'll get all of these videos immediately when they are loaded. So make sure you have notifications turned on to get these videos. These are timely, the earnings all stars charts. I'm doing them every week. And then obviously the companies report and we won't care. But some of our other videos have a little longer shelf life. Our top stock picks of the week are out every week as well. And the Zacks Market Edge podcast that I put out. You never know what topics I'm going to be talking about on there. We recently covered a couple small cap AI stocks to start the year. But be sure to subscribe to get everything. You can go to zacks.com/YouTube and it'll take you right to our page, or put in Zacks Investment Research and you'll find us there. But be sure to get us somewhere, and I'll see you again next week with some more earnings charts.